Hey everybody, it's me, Gregory Mannarino. How are you today? It is Wednesday, February 14th, 2018. People, there's a couple of things going on right now that are very interesting. Let's start off with a little synopsis with regard to this market. Right now, all three major indices are lower, not by much. As a matter of fact, the Dow Jones Industrial Average opened down triple digits. It's already just about halved those losses. Now, what happened? Very interesting. If you were following the futures prior to the market opening, was pointing towards a significant gain right out of the hole, right at the open. Well, all of a sudden, we got this inflation report, which came in much higher than expected. The market hated it, and within the blink of an eye, we had a triple-digit gain in the futures, which quickly reversed to a triple-digit loss. Treasury yields bumped higher. As a matter of fact, as I am doing this video blog, the U.S. 10-year yield is 2.88. Bonds are selling off. That's putting a little pressure on the stock market right now. Let's see how this day ends, people, honestly, because the indicators, in my opinion, are all looking bullish here. Let's put a few other things into a perspective. What else did we find out today? Well, we're in a recovery. It's fabulous. You know that, right? I mean, that's what we keep hearing from President Trump and, our politicians. Meanwhile, retail sales just hit an 11-month low. Okay, not only did retail sales hit an 11-month low, doesn't make sense, right? In a recovery, people should be out here spending, right? Okay. We also found out that U.S. household debt just hit a new all-time record high. Does any of this sound familiar to you? Well, yeah, it's a lot of what we saw at the top of the last bubble. We are in a bubble. Market's in a bubble. Doesn't mean it's not going higher, but we are in a bubble. So here's my take on what we're seeing here in the market. So yes, we got this inflation data spooking the market, no doubt about it. Cash moving into treasuries. Treasuries are getting sold off, which is pushing yields higher. It's kind of an inverse relationship. Gets to me sometimes as well. A lot of people write to me about that. Okay. But we find out that the consumer is weak despite the fact that they've borrowed themselves into oblivion. So what does this mean? I believe the market's going to digest it this way. Again, that's what's going on right now. Market is kind of thinking about what's going on. It's digesting all this economic news that we have. What it means is the Federal Reserve, despite the fact that we got this inflation report that came in hotter than expected, is going to have to slow its pace. I know a lot of people are going to say the opposite, but think about this. They're going to have to slow their pace of rate hikes. Now, the Fed has been talking about hiking 3 or 4 times this year. I can tell you right here and right now that that's not going to happen. And again, I have been wrong one time and one time only in all of the years that the Federal Reserve has been talking about what they're going to do. This is how this is going to play out moving forward. We are going to get a token rate hike next month, 25 basis points. It's going to affect the short end of the curve, the federal funds rate. All right. Then we're not going to get anything for a little bit of time. That's my take on it. So the market is going to digest that. It's going to realize that the Fed has got a little bit of a problem here. It's going to have to back off from its strong stance on raising rates, and the market will move higher. You got that? Now, this inflation data should be positive for metals moving forward if we lived in a real environment, which we do not. Hey, how many of you heard about this this CBOE futures VIX rigging? How many of you? Well, it's not getting a lot of airplay, but look it up. Rigging of the futures in the volatility. You know, this is real. And again, it goes back to what I've been saying forever, that this market is fake across the spectrum. Volatility isn't even real. Wow, that's all I have to say. All right, look, so let's keep our eye on everything that's going on here, people. Again, the market is digesting what's going on at this point. Don't have any idea where this market will end the day, although, again, the indicators are still bullish. In my opinion, if you have a copy of the RIP system or whatever system you might be using, look for yourself. I think when the market figures out what's going on here, despite the fact that we got this inflation number higher than expected, we got bad retail sales, they don't like this, okay? They're going to want to boost this up, no doubt about it. So the Fed is going to need to back off. You knew that already. I know you did because you're smart. With that said, I'll see you later.